All right, so here we are, the 19th of September 2019, 8:30 p.m. Indian Standard Time, yet another live mentorship session. I'll welcome each and every one of you. I'll start with our Nifty view, like we always do. The tale of the two channels is playing out, so we'll discuss that in detail. And then, like always, we will take up each and every doubt and trade of yours that you have traded over the week implementing our mentorship trading strategies. So let's do that top-down approach, starting off with the weekly chart. So you remember this blue channel, and now the market has closed below the blue channel. It's closing. This is a weekly close. So we can make an assumption on a Thursday night, just one more day to go, that this is the second time that on a weekly basis, the index has broken the blue channel. The first channel, when it broke below it, it actually saw like a trap and it bounced back inside, stayed there for 3 weeks. But this week, it seems the break is for real. And if this break happens, and if the market actually closes somewhere here where it is, I'm talking about in terms of this blue channel, then it is not a good sign. Then it means that a price channel which is close to 3 years old, this is December 2016 lows, is breached, which is not a good news. We know that the levels we are talking about on the downsides are the next 10,400 and 10,000. Excuse me. This is something that we derived long back using Fibonacci and channel rules. It seems like one should prepare themselves for these kind of levels, especially the psychological 10K level. Why I say especially the psychological 10K level is not to sound scary or anything, but as we move on to the daily chart, we should actually now have a new channel which suggests that 10K is the target. So I'll come to that little later. But first, the shorter channel, which is this green channel, sloping down. Index on a closing basis is the lowest close. It has actually broken below the close of this previous low. And it's clearly going towards this green channel borderline on the downside. Whether it will find support or not, whether the market's going to turn around and whether this is going to be yet another trap or not, that needs to be seen. But if you recall that on this Thursday, the 22nd of August, a recording if you listen to, we were quite confident saying that there's a possibility of this as a trap. I somehow don't see this happening this time. If it happens, then again we'll see similar thing which we saw on the very next day, which was 23rd of August. But if such kind of a reversal doesn't happen, then a continuation is very much likely. And in that case, first, this green channel will go away. Now, as I do my channel drawing and redrawing based on the values of RSI, a very important channel now crops up. I would not say important, but very interesting channel crops up. And I'm going to use these tools on TradingView, and I'm going to take you to this channel. This is the new channel on the block. Considering we have the blues and the reds and the green, I will try and give this a slightly different color. So let's say yellow. And there you go. Now, this is the mid-July to mid-September. So August, September, we're looking at a 2-month-old channel. And based on the RSI rules that we have learned in our mentorship class, if you consider this to be your ZOC, then this channel projects a downside target which is slightly higher than 10K, somewhere here, which is not a very good sign, of course, but our Fibonacci red channel as well as the projected target of the yellow channel is suggesting 10K. I'm not making any prediction here. I'm just trying to prepare ourselves for levels on the downside. If we see a close below this green channel sometime soon, then the use of this green channel will dissipate. And as the market shapes up, we will have our new levels and new supports that we will watch for. So let's sum it up. It's bearish. The market's broken below the long-term blue channel, the 3-year-old channel, almost 3-year-old channel for the second time, and this time it's staying down. On the upside, there's nothing new to be added. This is our zone. So bullishness will only come above this. As long as this is not taken out, it is difficult to say that the markets are in a bullish sentiment. It stays bearish. Short-term bounce backs will be sold into, and short trades may see further extensions on the downside. In terms of levels, there's nothing new to be added. 10,400 is what we are looking at. This comes from the Fibonacci number. Of course, this used to be a very strong support zone, so we can keep an eye on this. There had been clusters. There you go. There you are. So this is the cluster where the market's essentially bouncing back multiple times. Below that, we have the level of 10,400 here and the psychological 10K. It is essentially bearish. The market is at supports. We will see what happens going forward. We will take a look at the Bank Nifty as well. Though our analysis in Nifty is far more detailed, we have not done such in Bank Nifty. Probably for the next class, I'll prepare myself with all the channels and not waste too much of your time doing it now. But a quick look at the Bank Nifty clearly shows this. It's slightly better than the Nifty because it's not broken down its lows. It's right at the supports. On the upside, it also has a similar kind of resistances coming in from this zone up here. So the index is also at supports. Will it bounce back? Needs to be seen. But looking at the Nifty, that the kind of analysis that we have done, we have to see whether the market again turns on a dime or not. My sense is probably not. If it had to, it probably would have then, not now, but you never know. Bank Nifty is at support. It can halt considering it's fallen one way, considering this is a very strong support zone. But if this goes, then we are headed for some serious price correction over the next few months, if not quarter. So summing it up for this week, bearish we are. At the supports we are trading. The sell-off can ease off, can stop, but the very fact that we have seen the second successful breakdown of this blue channel once and then after 3 weeks now, this is not a good sign. It means that the first time was the time where the shorts got trapped, and now this is for real. And if this is for real, then it might lead to some serious weakness. If this entire hypothesis goes wrong, then this can be a trap and we should see another bounce back, a sharp bounce back like we saw over here, extremely sharp bounce back we saw on 26th, a gap up. So if that happens, then there's again the same story of the green channel top, the resistance, etc., etc. We're essentially not gone anywhere. If you look at since 5th of August, so the entire August and the half of September, almost 2/3 of September is gone. So we are looking at almost 2 months of price completely staying in a range. Not good for trend followers, they will bleed. Good for contra traders, short-term, range-bound traders, you'll probably have a good time. But let's sum it up. Bearish view, sell on a rise, short positions can be extended further overnight. Currently at supports, there's no supporting element to suggest that that this support will hold. We will see extremely strong resistance on the upside. As long as 11,200 is not broken, don't consider to be extremely bullish or complacently bullish on the market. Trade, keep your trades short term in nature, quick entry, quick exits. Do not carry too much of overnight positions. So that's our Nifty Bank Nifty view. Let's move ahead like every Thursday night. Please post in your doubts and questions and I will take up each and every one of them.